After 9 straight days of gains, the stock market finally seemed to hit a little bit of a ceiling today. The S&P 500 dropped 0.6%. The Nasdaq fell 0.7%. The Dow snapped its win streak with a modest 99-point loss. But this wasn't just technical fatigue. The market reacted to a new wave of tariff threats from President Trump, including a proposed 100% tariff on foreign films, which sent entertainment stocks like Netflix and Paramount reeling. Ford withdrew its 2025 outlook, citing tariff impacts. Tech stocks also took a hit. Meanwhile, oil prices tumbled to 4-year lows as OPEC surprised with plans to increase their output. And in the opposite direction, gold shot above $3,000, $3,300 an ounce as investors started looking for safety, continue to look for safety. On the economic front, services sector growth comes in hotter than expected, which could influence the Fed's messaging ahead of Wednesday's rate decision. And tonight's video, we'll look at whether today's action signals a trend reversal. We're going to start coming back down and retest, or is it just a temporary little breather? And I'll show you which sectors and technical levels matter most from here. So let's go ahead and get started. Today is Monday, May the 5th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website on MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. If you're watching us here on our blog, make sure you sign up for our daily Market Outlook email up here at the top with that subscribe free button, or just fill in this form right here on the right. Here's our Market Outlook Live, where I take a look at old Market Outlook trades, see whether we should stay in them or get out of them. I do that every day at 3:30 Eastern Time. Just click here or come up to the live trade review in the Market Outlook menu. Come down to the bottom and you can see, click on this heart. It opens up this tab. Click that like button there. Same thing here. Click this thumbs up icon. It opens up this tab. Hit that like button. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those do that day in and day out. Those who don't, you can do it right now while you're watching. You can also kind of get a quick review if you just want to quickly read a review of what we're talking about in today's Market Outlook video. Let's start off taking a look at the S&P 500 with the market forecast indicator. So, again, this happens quite a bit when the intermediate line is crossing 80. The near-term line is usually crossing out from below 80. Almost happens almost all the time. You can see it happen here. It happened here on this rally. Even happened a little bit on this one, secondary rally. It happened here on this one. It happened over here. So it's not surprising. The intermediate line is crossing above 80, and the near-term line is crossing below 80. The momentum line is oversold, but not extremely oversold. We finished off the low, so it wasn't so bad. So it's a little bit of a pullback. We see this all the time, right? All the time. That intermediate line crosses above 80 like it did right here on this day here. The momentum line was oversold, and the near-term line had crossed below 80. It was actually looks like it was right at 82 on that day, and then crossed below 80 the next day, and the momentum line had rallied. So it's not, this isn't a big deal at all. It happens all the time that the near-term line crosses down. I'm not so worried about it crossing below the intermediate line now because the intermediate line is above 80. So we're just fine. It's an oversold momentum line. It will, it can be oversold for another day or two because the near-term line hasn't dropped below 60, much less into the bearish territory yet. So I wouldn't be surprised if we stayed down, depending upon what tomorrow looks like. And if we pull back a little bit more, again, nothing more than just, we've gone up for 9 days. It was one of the historic 9-day moves that we've had. And it's not surprising for people to take profits. And that, which usually means smaller than average ranges. Look at how small that range was today. And very small volumes, as you'll see here in a second. So that's really what we saw today. It was nothing really more than that. Intermediate lines are above 80 is rising. It's strongly bullish now. You still don't have a green line yet. You're back to yellow again. So we're not really we're over the 2.5% mark. We're in the 95th percentile at 3.5%. But you can see it's pulling back. So we're not really pulling that moving average up quite yet on the S&P 500 to get a dark green shading and a green line. We are in the Nasdaq. The Nasdaq's 5% above. Same thing happened. The intermediate line crosses, near-term line crosses down. Momentum line oversold. Again, it happens almost all the time. when the intermediate line is crossing up. So, and then usually you either get a cluster on that first little run up to the upside, kind of like this, or you end up getting a cluster, or like this one over here, or you'll get a cluster, right after, like on the next bounce back up to the upside. So obviously we didn't quite get a cluster this go around, but again, just a weak little small pullback. Really nothing more than that. When you look at the Dow Jones Industrial Average, whoops, can't see with my microphone in the way. You can see here that same thing, right? You were above the moving average, not by very much, so it's still yellow. We got a green line. We're not above 80 yet here, and the near-term line's down, but still above 80 actually, so it hasn't pulled back too far yet. And you can see the momentum line is oversold, but not too much. So, this would be considered an intermediate confirmation signal. That would be, it would be more significant, be more ideal of a signal, of a buy the dip signal if the near-term line was also at least below 50, if not below 40. But that's not the case. So we may be oversold for another day or two on that momentum line, is my guess. And then finally, the Russell 2000, again, dropping down, looking very similar. Again, very similar to the Dow in terms of the intermediate line, very similar to the S&P in terms of that momentum line dropping pretty sharply lower, and the near-term line dropping and almost falling below 80. So again, looks pretty similar all across the board. We've rallied above the moving average. We've built on whatever bear tag we've gotten, bear tag type pattern we've gotten on the crossover. And we're pretty decently above it. I mean, we're 3% above it. It's the 70th percentile, but still, that's a pretty decent spot. We're not threatening dropping back below the Russell, especially with the ranges as small as they are. So we like it. I mean, if we're going to have a pullback day, it's better to have it like we saw today, where it's just, not very much of a pause, and everything drops. You can see Bitcoin, if I look at Bitcoin, it still has a strong bullish pattern despite a little pullback. So it kind of similar to what we see on the S&P. Bitcoin's momentum line was oversold, the near-term line was dropping. So we say, one more day for the near-term line to come down, and now it's in the oversold level. This is actually for today. So this would actually this is for tomorrow, excuse me. This is actually today's. Again, intermediate confirmation signal that we expect would probably lead to some kind of bounce going into the rest of tomorrow. We're up just a smidgen here in the after hours. Gold continues to move significantly higher. You can see the nice little bounce it had today. Remember, this is tomorrow's candle. Nice little bounce today, short-term pattern coming up. The near-term line rebounding and getting here up above the intermediate line at 63 versus the intermediate line at 59. The momentum line at 78. So this is, day one of the near-term line crossing above 40. It happened to cross above 40 and 60. And the momentum line was above 80, right at 83. So that's the ideal bullish pattern for gold to bounce back up. And, a lot of that's happening because of the bounce down that we saw in the dollar today, coming off of potentially a bearish near-term peak. And we'll see where the next near-term low ends up. All right, now let's take a look at the weekly chart here for the S&P 500. And you can see a nice, good bullish body, obviously a smaller body, but still above the average down here at the bottom. Let me get rid of that line. Still above the average. There's the 5% mark that we look at when we are above it and you cross below it. It leads to correction, as it did. We're still in this death cross environment. We're flirting with the Akinashi close is actually above 56.49. The Akinashi closed at 56.55. So just like that, we already closed. And we get this correction and get this death cross environment, which is what happens on pullbacks, right? In pullbacks, you get corrections and death cross environments. You can see in 2022, 2018, 15, 16, 2011, 2010, and then, of course, 2007, that ultimately never did get back to green and turned into a bear market. So obviously, you can see this would be the smallest one, as we didn't, last very long below. You can see here it's already rising. We're only 1% gap between the 10 and the 40. If I put my cursor at the bottom, it's the smallest bottom that we've had of all these other corrections. Only 2010, but remember we didn't get much of a death cross environment there either, because we were already below the 200-week moving average when that happened. So pretty weak correction from that perspective, but as of right now, still bullish candle. I mean, it's a higher Hakinashi close, not a higher high yet, but a higher Hakinashi close And as of right now, we'd still be pretty bullish here, relatively speaking, going into next week. We'll see how that plays out. If we end up with a transition candle next week, which, if we don't get a higher high and ultimately we might end up getting an equal or lower Hakinyashin close, then that would really set us up for a transition candle next week. From a 3 green arrow standpoint, we continue to have 3 green arrows all across the board. It's a very good sign. Again, that's kind of what we want to see. When you're only 3 green arrows for a day or two, then you're likely to bounce down. But when you can see even here in March, though, we were up above the moving average quite a bit. We had a lot of days in a row, 3 green arrows before we ultimately had our leg lower. So this isn't the end all be all. It's positive. This is a very positive development because that's all the bounces look like this. But still, it's like, we've seen, late in the last correction, we've seen a rebound like this not break out to new ups to the upside. You can see, we're still below, we're above the 50-day moving average, so we're holding that breakout. We're still above the point of control, but we're still below the 200-day moving average. The MACD is pretty positive. It's above the 1% mark, so pretty high level, relatively speaking. Let me zoom out so we can get some perspective on that. So you can see it's a pretty high level. We've been above 1% before. Even in March of 2022, we were above 1%. So, that's strong momentum, but it's probably as strong as it is mainly because of how bearish, like that was one of the weakest bearish momentums. And you're going to slingshot when you get those kind of bearish moves, as you see on all these others. You tend to slingshot when you get these bearish runs. The only one that didn't was that kind of almost wide breadth thrust that we had there in May before we came down. Then we slingshotted up to that August peak. So that happens when you get these big lows. You slingshot back up to the upside there in terms of momentum. Remember, we were really close on these other oscillators are showing breakout patterns. We're still not there yet. The positive is slightly above the negative indicators down at the bottom right. But they're both still below 25. We need the positive to get above 25, the negative to get below 20, and that's not happened yet. The RSI and the CCI, we like to see the RSI get above 60, so I can start, go and start a green box from this point over here, and that hasn't happened yet. We haven't gotten above it. We're still above 100, but we haven't got above 150 yet. So we haven't had a really good strong breakout pattern from that perspective. The trend is sitting right at the edge, right at these intermediate strength trends where if you can't break through it tends to act as a resistance. So if I were to go back to the 2022, you can see during the rebound here, we got up to strong levels, strong bullish levels. And then, during the May, we never did start a trend. And here in August, we had mature bullish levels. But then as you can see in some of these other pullback, other rebounds like this one, you got up to the intermediate line, strength lines, and stopped and couldn't get above that. And then we had a mature run, another bullish mature run, another run there. And then this one couldn't get above the intermediate strength trends before pulling back. And then another getting close to mature runs on both these other times. So you can see that it's really important here that we don't use this level as a resistance, kind of like as we actually did going into the correction, right? We had an intermediate strength trend. We were bordering on intermediate strength trend. We failed to get above those levels, and we came back down. So it's really important, again, that we don't fail at these levels and come back down to first a no trend, and then eventually to a new bearish trend. As we're still below the cloud, we're still got a negative rate of change, just barely, but still a negative rate of change. So we'll see how much longer that lasts, because we're pretty close to crossing through the cloud if we can't, as long as we don't drop at the same pace to where we move, right along here to get to below the cloud by, next Friday, which is that options expiration there. So, again, we either get a significant drop by next Friday, or we're going to have a nice little breakout through the cloud here to the upside. If I take a look at the Bollinger Bands and the Keltner channels, again, we're flirting with getting in the upper quartile, but can't quite get there. At least the bands themselves have finally broken out of the Keltner channels, even if the momentum is as extreme as it is and unlikely to stay this high. But it hasn't turned south yet, so that's a positive development. If I take a look at the weekly chart, or the daily intraday chart, You can see, very, very small range, pretty much stayed inside of Friday's range, which is also very, very small. But at least they had that gap that we had a gap this morning that we filled in. So, we're still kind of in the process of filling in Friday's gap and Thursday's gap, which for that matter also would be considered common gaps and are susceptible to a near-term decline, and filling those two in. So it's very feasible there. The Arun indicator is still looking very positive. As of right now, it's still a kind of a one touch, right? We did get a new high on Friday, so we had 2 days there at the end of last week on Thursday and Friday of getting new 4-week highs, but not today. So we'll see if that ends up being a one touch or not. The red line's already at 0, so if that green line falls below 70, now we're susceptible again, right? And that means that we'll be dropping into back out of these strong bullish levels, back potentially below the moving average. The moving average is up above 60, so it's a very positive development. Again, looking at 2022, however, you can see in March the 20-day average got all the way above 80. So that's not the end-all be-all. In August, of course, the 20-day average of the blue line got all the way above 90. So we've seen times where we've had a bullish run and it's failed, and so as of right now, it's looking pretty positive, and we expect that it won't fail, but we need to be aware of the possibility that it could. All right, so if we take a look at the volatility index here, first let's look at I'm going to show you how small the volume was and how small the range was here. So let's pull that up first. Again, you saw the range, 5 points. Versus an average of 14. The volume, very, very low levels. So, again, we're kind of approaching these inflection points, but with, very light volume and very light trading ranges, and it's bringing the averages way down. Still very high, still pretty high above 2 on the ATR, but the volume now is starting to kick over. So, again, that's usually what you want to see when you're through moving averages, and we're not quite through that 200-day moving average. You're still going to need a big move to break you through that level. And, again, the idea of escape velocity there. Finally, let's take a look at the VIX. The VIX is up a little bit today, 4%. It's still kind of flirting with 25. It did get back above that 95% mark down at the bottom relative to the VIX 3M. And you can see the VVIX is still, still sitting right around 100. With the VIX itself, relative to its own average values over different time frames, you can see it's still above its 200-day, and kind of, it's below these other averages, but it's still above the 200-day, which it needs to get below if we're going to change the trend, right, and really solidify, a bullish intermediate run that we're trying to get going here, right, with dark green shading and a green line, but we're not quite there yet. On the establishment of that intermediate run, new bullish intermediate run. All right, now let's break down what's driving a lot of this price action here. You can see again, gold, really big move up to the upside today. So let's take a look at May the 5th. You can see the big jump it had, big jump up 3% in one day. The dollar was down, but it wasn't down that much. Big move higher. International stocks both had really good returns. Emerging markets up almost 1%. Developed markets up 0.25%. The U.S. equities were down, finishing near the lows of the day, finishing right up there where commodities are down, and real estate down as well, and treasuries down, which means yields were up. So let's take a look at some of these charts. You can see the chart on the 10-year yield looking pretty good, continuing to push its way higher. We kind of talked about this a little bit here. Let's take a look at this chart rather than the market forecast. You can see it's back above its moving averages. The 8 and 17 day are moving up. The MACD and stochastics crossing their moving averages. So it's looking like, remember, we are, we're the midpoint of the range. This is the midpoint of the range of the current Fed funds range, between 4.25% and 4.5%. In fact, when you look at the odds here of a rate cut, so let's look at the, oops, sorry, not that one. Let's go to this one here. We'll come back to that in a second. But if we take a look at the odds of a rate cut now, which, we're not going to get a rate cut at the next meeting here this week. So it's just going to be a matter of, press conference. You can see it's, well, here, let me just go to May. And there's not going to be any projections released this week. So it's going to be really kind of a nothing burger of a week. It's just going to be a matter of, what does he say at the press conference there? But June, that's the live meeting, right? And right now there's still, I mean, it's even higher odds today than it was there at 70%. So 70% odds of a cut here in June. And then the question is, does that start a cycle where we cut all the way through to the end of the year? That's going to be what people are watching for. And the 2-year yield will be able to give us an idea of that, of giving us the path of where the Fed funds rate can go. That's what the 2-year yield shows us, whereas the 3-month yield is more of a kind of a real time. This gives us an idea of whether they're going to cut. So it hasn't been moving, so they're not going to cut this week. But the 2-year yield is way below the current range between 4.25 and 4.5. So they're definitely the bond market is pricing, even though it's rallied here in the last couple of days. The bond market is still pricing in that cut, and maybe just not as many cuts as what we've seen, as that 10-year yield, the spread between the two continues to rise. Is at the highs of its period here at 51 basis points. That's the high point, near the high point of its recent surge that we've seen. Remember, we don't want that. The market doesn't like a rising yield spread. So keep that in mind from the 10-year yields perspective. We also talked about the dollar and kind of what it's doing. But importantly, commodities. And you can see commodities are just still strongly bearish, well below its 200-day moving average. We see that with crude oil as well. Crude oil, coming down, finishing near the highs of its day after gapping open on Sunday night to the downside. But still down, and you can see it's down. It's still well below moving averages, still well below the value area, and for that matter, still well below the 5-year, the weekly 200-week moving average, which again puts it in bearish territory. So this is like, we haven't had crude oil be this low since all the way over here in 2021 when it was rising up so sharply. So this is a significant drop that we're seeing here in crude, and that's going to have an impact on at least in terms of like economic growth expectations, because again, economic growth the last time we spent considerable time below the 200-week moving average was COVID, number one, and before that it was kind of in this 14-15 range where crude oil also dropped pretty significantly below that 200, right, coming off of 2014 where the dollar jumped up significantly and crude oil went from $100 a barrel within a year later down to $28 a barrel, and then we had our correction at the end of 15, beginning of 16 as a result, and again we also had a period of time there in the bear market. So it's not generally a positive development for the economic situation when crude oil is dropping as much as it is, especially when you combine that too with gold rising as much as it is. Still on a parabolic move here to the upside. Jump back up here above moving averages. I wouldn't expect it. Like here's the big surge in the MACD. We're not going to get another big surge like that. But can we get up to a slightly higher high? Can we trade inside of that range? For sure. But I wouldn't expect any new higher to be significantly higher. I think we're still in this kind of washout phase to the upside, where this MACD is really high, and at best now we're being some kind of like convergence mode, where again at best, kind of like here, we just kind of grind up. We actually went down a little bit here, but the grinding, it'll be more grinding instead of parabolic like we've seen here. You can again, you look at the DMI, and we'll look at it for the futures contract here. It's a strong move, and it's been pulling back. That the ADX has been pulling back. That's why I say don't expect a big new surge here as we're coming off of a surge. It's usually kind of hard to start a new one again without some kind of reset, which obviously we haven't had despite that little pullback that we've had there in crude. So those are kind of the main things that from a Brett standpoint. We're still positive. We're not as positive. We're still almost near 50. At least we're above 35. The summation index easily above 0. So we're still positive from that perspective. If you look at, we like to look at these, like the new highs and new lows, the net new highs and new lows, the number of stocks with a 50-day moving average. Like that's still pretty positive too. At least it's above 50%. not quite above the 60% mark to really be like, okay, now we're trending. But it's blown through that moving average. It's blown through the 200 level, so get out of bearish territory, and it's crossed above the midpoint. It's brought the ratio down to really low levels, which is good. It's a good sign for a new rebound to the upside. And the last thing we kind of really need to see is the net new highs and lows get above 100. And right now they're still not able to do that. We're still kind of flirting, just barely being positive, and that's okay. Like, we've been so negative, it's going to be hard. It's like you saw over here. It took a while to get above 100. We were almost to new highs by the time we got to 100 or above 100 on the net new highs and new lows. So it's going to take a minute, as we're not anywhere close to new highs yet. And and as of right now, you can see again from a zigzag perspective here, we got a green box at 10%, and we'll see how much this goes before we get another red box, ideally to a higher low point. The nice thing here is, while we've been pretty bullish on the whole, starting to weaken a little bit here, but we've been pretty bullish on the daily whole. The weekly whole has just turned bullish. You can see the weekly has turned up. We are that close to flipping the parabolic SAR. The parabolic SAR, there's at 568.38. Today's high was 566.65. So we're very, very close to flipping this parabolic SAR to the downside, way down here, which would be a very bullish development. Now, we had a large body and last week, and we are above the moving average here on the PPO. So it's not, we haven't turned it around completely, but that is a positive. At least turning green is a positive sign, because you can see we don't get a lot of maneuvers here where we turn green briefly. We did kind of there. We actually did flip the parabolic SAR too in March of 2022. Had a little bit longer of a green line going into that August level. And we also flipped the parabolic SAR to the downside as well. So we've seen this move, and we'll see if, we didn't get above the 200 week there in March. We weren't even close to it in August, and we're a lot closer to it this go around. So hopefully, we're able to flip it and gain some momentum and really get going up here. Otherwise, we have a March 2022 repeat on our hands. All right, so let's take a look at the sector rotation and see how they're doing here today. You can see over the last 3 months, your safety trades doing the best because they held their value well during the decline. Today, you can see technology was not one of the leaders. It was actually communication services and industrials, kind of matching there by the end of the day with staples and utilities and real estate. So your safety trades kind of outperforming the markets and outperforming XLK today. Not the best sign. Discretionary underperforming the markets. Again, not the best sign, with staples outperforming discretionaries. And then energy, it's not a bad thing that energy is declining, but again, it's also a reflection of just how weak commodities and crude oil are, and that's a reflection of how weak our economic situation, our economic growth expectations are right now. All right, and that brings us to our trade idea of the day. It's actually in this consumer discretionary space. Let's take a look at Target. Unlike Walmart, which has been pretty darn bullish, Target has not been. You can see it's actually turned back to the downside here. It's been a steady bearish trend all year long. Had a little bit of some strength here, as the rest of the market has, but unlike the rest of the market, we've kind of turned lower today, down 3.5%. Near term line falling below the intermediate line rolling back over, hence the dark pink shading. Momentum line down to pretty strongly bearish levels. If you take a look at the weekly chart, you do see we have earnings coming up here. It would be after the options expiration in May. We're in a death cross environment, pretty steady, pretty bearish death cross here, about as low as we've been. Doesn't mean that, even at these low levels, you can still retest these lows, and it appears to be kind of what's going on right now at the very least. If you look at the 3 green arrows chart, you can see we don't have the 2 arrows in the MACD and the stochastics yet, but you can see the failure there at the moving average, and we haven't had 3 red arrows for quite a while. If you take a look at the 2-line version of this chart, you can see again we're well below the 200-day, 50-day moving averages. Oops, sorry. Let's go back to here. You can see we're well below those moving averages, way below them. We're below the value area, way below the value area. You know, you can, again, from a bear market standpoint, Target's been in the bear market since 2023. So it's, you know, Target's for 2 years now has been in the bear market. You know, it had this big old bear market rally at the end of 23 into 24. But then, you know, now it's gone to new lower lows, and that's what a bear market is. You trade below the 200-week moving average, you can't bounce, and you break through, and now we're below that, and it has been for multiple years, really struggling there. When you take a look at some of these other oscillators, like the DMI, you can see it's, you know, it's not bearish, but you know, you can see it's turning more bearish with the negative indicator bouncing up, the positive indicator already pretty low. Looking at the RSI and the CCI. You see here that, you know, the RSI is dropped from 50. The CCI is close to crossing below 0 again after being briefly above 100. Looking at the Ichimoku cloud, we are still way below the cloud, back below the green line, pretty strong negative rate of change. So even though, you know, we had this very strong bearish trend that we ended here yesterday, and then just like that, we're, you know, potentially starting a new one here today. Or excuse me, that would be on Friday, sorry. And then you look at the Bollinger Bands and the Keltner channels, and you can see we are in the lowest quartile of the bandwidth. The bandwidth has come way down because of this, the bounce that we've had. It's brought the bandwidth way lower here. The band's way inside the Keltner channels. So we're setting ourselves up for a breakout move, you know, a squeeze play where you break back out or start trending in this case, most likely in a downward direction because of what we're seeing here today. So what I decided to do here, the earnings coming up, was to do a quick little bearish trade, a bear call spread, selling that 40 delta. At least it was 40 when we did this in the Market Outlook Live. So the 100 strike, buy the 105. So you can see it's, you know, the market's, you know, kind of where we're at when we got into this trade already. And that break even ends up being way up here, up to the upside. So we have to break through the upper band to get to the break even, which, you know, obviously we don't want to be in a bearish trade anymore if that happens. So, you know, that at that point we're probably going to end up losing what we're trying to make, which is about $400 or so. And considering we're willing to lose 1,000, that'd be a good way to close out with a smaller loss and reallocate that capital. Otherwise, if it can go down quickly before earnings, then we might be able to get a couple $100 really quickly before the earnings announcement, and then we can just take our gains and move that $1,000 elsewhere and use it for something else and not have the risk of that. So we'll kind of see how this trade's going into that earnings announcement. All right, well, that is it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.